Good morning. This is the continuation of the class on the balance sheet. We have elements of the balance sheet. Under this, we have property, plant, and equipment. Now, these include land, building, machines, and equipment. We have also current liabilities. Now, these include accounts payable. These are bills for which the company owes money. Property, land, and equipment. Property and land means the land on which the factory is situated. Building, fixed assets means the building or the on which the particular office is situated, or building in which the factory is situated. We have machines into capital in nature, the machines which produce the particular items which the company trades in, and so on. Mm, then we also have current liabilities. Current liabilities are the accounts payable. These are the bills for which the company owes money to vendors and suppliers. Accounts payable are those money for which the bills for which the company owes money to vendors or suppliers. Accounts payable are the bills for which the company owes money to vendors or suppliers. Elements of the balance sheet. Now, current liabilities are the bank notes. Bank note means, and these are money which are bought from a commercial lender or financial institutions. That means bank overdraft, cash credit, and all that. And other current liabilities, these are short-term liabilities, usually accruals, means some unpaid expenses, like you have some insurance premium due and all that. So these are usually short-term liabilities and are accruals in this nature. Now, balance sheet, we can represent the balance sheet as a representation of the assets, the liabilities, and equity of a company. Now, what is the equity of a company? Equity of a company is the share capital of a company, and it can be divided into two parts. That is in the uh, uh, the equity share capital and the preference share capital. And however, the balance sheet gives a snapshot. Particular, we say in case of India from April to March, it gives a snapshot as on 31st of uh, mm, as on 31st of a particular month, as on 31st of a particular month, mm, as on 31st of a particular month. What we have is uh, as on 31st of a particular month. Uh, uh, so it just gives the particular picture for that day, for the whole year, for the whole financial activity, for the whole financial year on that particular day. Now, this is, we have two formats for the balance sheet: the horizontal format and the vertical format. The horizontal format is given where we have both the liabilities and the assets side by side. Now, the liabilities and the assets, they both have the side by side. They both have the side by side. Let's say we have this share capital, we have the fixed assets, that the liabilities on the left hand side and assets on the right hand side. On the share capital, we have authorized, issued, and subscribed share capital. Authorized share capital is the amount of share capital that the company is can maximum uh, mm, uh, acquire. Now, issued means out of that amount authorized by the company memorandum and the articles of association, how much has the company issued, how much has the company actually acquired from the market, and out of that issued, we have subscribed. And out of the total amount issued in the market, how much has been actually picked up by the public, or by the promoters of the company who have started the company. Less we have calls unpaid. Say a share face value of a share is particularly is 10 rupees, and only 8 rupees have been paid. So the calls unpaid will be 2 rupees, and the total amount of share capital will be 10 minus 2, that is 8 rupees. Reserves and surplus, it includes capital reserve, that is reserves for evaluations, capital reserves, reserves such as profit and loss account reserves and all that. Now we have PL appropriation accounts, we have capital reserves, we have capital reserve means we capitalize certain items from say profit and loss account and all that. We have general reserve, we have profit and loss application account, that is the amount that comes from profit and loss, and every year we have the structured loans, that is debentures, we have loans from banks, and we have other loans. Debentures means these are kind of bonds and etc. Now we have unsecured loans, that is fixed deposits. We have current fixed deposits, with that is company fixed deposits made by other people with the company. These are the fixed deposits with the company. We have current liabilities and provisions. From what we have current liabilities, we have the sundry creditors, the bills payable, the outstanding expenses, and we have the provisions for those outstanding expenses. We also have the fixed asset. In case of asset, the fixed asset. Fixed assets means plant, land and machinery. Goodwill is however intangible asset and generally does not appear in the balance sheet. You have land and buildings, we have plant and machinery, we have furniture, we have vehicles, we have investments, we have government bonds, we have shares, we have debentures, we have immovable properties, we have current assets, we have this all these things, plant and machinery, we have furniture, vehicles, investments. Now we all have everything with us. That is the land, the land, and we all have everything with us, and we all have everything with us, and we have and these land and buildings. Uh, uh, we have plant and machinery. We have uh, uh, furniture, vehicles, etc. We have investments, we have government bonds, we have shares, we have debentures, we have immovable properties, we have the current assets, that is loans and advances, etc. Means we have current assets, that is debtors. We have stocks, that is raw materials. We have debtors means the person who have made credit sales. We have cash and bank balances, under which we have advances means amount paid in advance by the company. We have bills receivable, that is the bills that are payable to us. We have made advance payments for certain things such as insurance charges and all that. We have miscellaneous expenses, and we have preliminary expenses. The preliminary expenses are generally occurred when the particular company issues certain uh, particular company issues a certain IPOs of shares or IPOs in the market. That is all for the day. We will continue in our next class. Thank you.